last 2-3 years have taken a huge toll on the economy. The Pakistan Development Review, which is a study that the World Bank does, I think most years, and this latest was published in October, showed a poverty index of 39.4% against India and Bangladesh, which were sort of 21 and 15%. And the problem here, if you're talking about growth and recovery, the problem here, we used to be in the low 20s for poverty. If our poverty level has moved up to 40%, and then there are another two deciles above that are people with very compressed incomes. Where's demand going to come? Quite aside from all our balance of payments problems, our lack of resources, domestic demand has to play a role as well, and an important role. And with these conditions, that managing this balance between stability and growth is going to be critical, because stability on the one side, we know all the problems we have on the budget deficit, on the trade deficit. And in these conditions, how do you generate growth? This year, if it's going to be 2%, 2.5%, so be it. But we've got to be on a path to 4% and 5%. And we mustn't lose sight of that, because with population growth of 2.5%, 2.5% growth in GDP negates. You're basically where you were. So it's a huge challenge, and we'll have to look at it in different segments in terms of where we go from here. The first, as you mentioned, the banking sector. Yes, the banking sector is a huge contributor in fact, the principal contributor to development growth in developing countries, as there aren't deep capital markets, there aren't deep secondary markets, there aren't well-established bond markets, so the reliance is entirely on the banking sector. Our banking sector has 2-3 challenges. It's small, 32% of GDP. India, Bangladesh, much more. And India, I think, is over 60. Bangladesh is 51%. Asia is much, much larger. Now, so the banking sector is small. Then our private sector credit is only about 13 or 14% of GDP. Again, regions 2-3 times that, and Asia is 4 or 5 times that, and then Europe is over 100% uniformly. Plus, they have very deep capital markets. Our capital markets, let's take the corporate bond market, is percent and a half of GDP. India is 17%. South Korea, 85%. And much of Asia in around more like South Korea. So India is low compared, but then where are we? That market really doesn't exist. Our capital markets, as you know, IPOs are rare. They're not really a source of capital for growth. So where is capital for growth going to come from? Let's look at what is compressing the capacity of our banking system to grow. The first is the government's appetite, for deficit financing. So if you, again, in this PDR, the Pakistan Development Review, the World Bank says that 73% of corporate, of banking loanable assets in our banking system, 73% is taken by the public sector. Something like 57% in securities, 16% in public sector loans, mainly government guaranteed. So that leaves 27% for the private sector. In 2010, this ratio was inverted. 73% went to the private sector, 27% to the government sector, including securities. And I think in 2010, reserve requirements may even have been slightly higher. So in spite of that, anyway, then our development finance sector has really, we had good, strong institutions once, we don't anymore. That it's really hardly relevant. So the commercial paper market, the short-term receivables discounting market just haven't taken off in Pakistan. Now, as we go forward, it'll be a while before the government can repair its fiscal position so that its deficit needs reduce, and it smartens how it borrows by going outside banks, which is a subject in itself. Even in our conditions, it can do that. But it hasn't. 82% of government securities are held by banks, and only about 18% by the broader market, which includes pension funds, insurance funds, private investors, everyone. So anyway, there are ways in which this can be repaired, and that's the beginning of the reversal. As things work, there are things happening in the market today, in the private sector that are very encouraging. This whole digital initiative of digitizing supply chains records, so that the entire distribution cycle is recorded. And this is, of course, the big FMCGs, manufacturers, really, want to know that where their goods are in the channels of distribution, from manufacturer to distributor to sub-distributor to retailer to buyer. That's how it started. But what has been arising as a result of this is a lot of financeable material, invoices all along the chain, which, this is distribution, manufacturing down. It can work the other way. It can be work from the small supplier back to the manufacturer, the auto industry, different parts of the sort of engineering and manufacturing industry. And if our IT people, who are at the moment, there's a terrific focus on the distribution chain, if these, and they have, God knows how many suppliers and retailers are in this chain, generating invoices all along the line, if these invoices, with 2-3 years track record, many of them have it, can be listed for sale. India has this, I forget what the name is. They've got this, Reserve Bank of India created this along with a partner, invoice purchase on the exchange. They'd list all the invoices that were available that day for purchasing. So these sorts of new developments, I think, can make massive contributions to SME lending, which otherwise, as overall, the private sector lendings as a ratio reducing, and SME and agri together have gone down from 14% in 2010 to about 7% now. So they've halved. Bangladesh, the SME lending alone, not both, just SME lending, is 21%. And the region, Thailand, India, are all similar, 20, 21, 19. These are really areas where solutions will emerge from in the private sector. Now, for the whole situation to improve, for SME and agriculture to be better poised, that's going to have to wait a little until the government's borrowing need from banks is managed in some other way. Along the Indus Valley has gone on from 4,000, 8,000, 10,000 BC. So it's a very well-established industry, yet in Pakistan, it's the least attractive to finance. Now, something that has lasted thousands of years, why can't you find and will go on? It's there. The water comes, rain comes, crops go. And people buy what's produced. Same thing with livestock. Why haven't you found the right way to lend? One problem is the search for collateral. Our farmers, sometimes it's leased land, sometimes it's very small land, the title deeds are muddy, even though there's been an effort to clean all that up. But not many can, have neatly organized titles that banks lend against. But why can't you, given the fact that agriculture is eternal, why can't you lend against cash flow? Now, this is beginning to happen. And, 1 or 2 banks are taking the initiative. Repairing cash in circulation, which in our case is one of the highest in the world. Nobody is anywhere near our level that I can think of. 38, 39, 40, 41, 42%. That is a problem. Where is that money? It's in, I understand, a lot of property transactions involve cash. A lot of people holding commodities or other goods for trading, or holding them for storage, or holding them for speculation. But then also there's a third area, which is the transaction need for cash. If you earn 60,000 rupees a month, then opening a bank account is just a nuisance, because to sort of go a mile to collect cash and then walk to the bazaar, and you might keep it at home and just deal in cash. But these new things, again, this digital that's coming up, I understand, within a couple of years, we ought to be able to move up our rate of uh, electronic purchasing or digital purchasing, against anything, against credit cards or against QR codes as they evolve, which is something that's happening. That will begin to suck in this transaction cash. On real estate, I understand the way taxation is working these days. Real estate is not the easy hedge it used to be, because there's a cost now. You pay taxes on real estate, which is a good development. So to that extent, the cash ought to reduce. Then I think with all these checks recently on smuggling, a lot of the hoarding and the hoarded material, which again works against cash, that will start to reduce. So there are trends that will see a reduction in cash. And then with the reduction in cash, the other side of that is the increase in recorded transactions. With an increase in recorded transactions, you ought to see a rise in tax revenue, more documentation, a better tracking of where the money is, and better revenue for the government. So a completely virtuous development all the way through. We just need to hold our nose to the grindstone. To bring taxation to credibility, it's got to seem to be fair. So if you leave large sectors out of the tax net, such as agriculture, which is, the income tax is very, very low. There is some other land tax on agriculture, but that's very low as a percentage of. If agriculture can be brought in, if retail, which should be in, can be encouraged to come in.